Hello, everyone. Thanks for being here. And today we're going to be talking about 2026 because it's shaping up to be one of the biggest tax years in recent memory, one of those that has the most changes. And we've got a lot of little new things to go over and things that are kicking in and old ones that are actually expiring and a few things that are being extended that might surprise you. So here's the really good news. When you plan diligently, you profit intentionally. And that's what Proverbs 21:5 reminds us, that the plans of the diligent certainly lead to profit. That's what today is all about, turning tax talk into a plan. Your cash flow builds peace of mind and keeps your store thriving. So let's dig in. I'm Jacob Curtis, a CPA, certified profit professional, and your financial guide. My message is pretty simple. Help business owners like you finally get paid, master your cash flow, and run a business that gives you freedom. I started Curtis Accounting Solutions because most business owners don't need more spreadsheets. They just need a plan that actually works, even with inventory, seasonal sales, and some cash to the chaos. So if that's you, you're in the right place. Drop a comment, hit the like button, share this video, and follow along. So Congress passed a major tax package in July of this year, 25, that resets the landscape for 2026. It's good news for many small businesses because there are many small business-friendly provisions that are continuing or even improving. I'm going to cover what matters most for store owners, how you're taxed as an owner, how your store reports income, and what to adjust before year-end to keep profit predictable. So if you're an S Corp, a partnership, or a sole proprietor, your profit flows straight to your personal tax return. And the 2025 tax law extended lower individual rates into 2026. So most owners keep today's bracket and that larger standard deduction. The action step today is to adjust your withholdings and your quarterly tax percentages, things like that, for the coming year. Now you kind of know where you're at. We want to set the slide now so that come April, we have the money available to pay the tax if you owe any. Now, the 20% QBI or qualified business income deduction is still there, and that's great. The big win for small business owners, but you've got to play it right. Pay yourself reasonable wages, keep clean asset records, and coordinate with your CPA so distributions don't hurt your deduction. This is why you blend profit first strategy with tax planning to protect peace and profit. Now, state and local tax deductions got some breathing room under the new law. This helps store owners in high tax states, California, New York, those kind of states, especially if you're using the pass-through entity tax. But remember, more room to deduct doesn't mean more room to waste. Stewardship starts with some discipline. Now, if you sell online or through Shopify or a store like that, your 1099-K is back to the $20,000 threshold or 200 transactions. Now, don't assume that those forms are perfect. You want to reconcile your sales reports to your deposit every single month to make sure that what they report is what you also have in your records. And that's honestly, stewardship happens in those details. Now, the new law restored 100% bonus depreciation, which means you can fully expense big purchases like fixtures and racking, maybe even major POS systems when you buy them this year. So just make sure that they're placed in service within the right window. And for the product first, people never buy for deduction, but buy for productivity. So Section 179 is also a depreciation. It is also helping. It's still your best friend for those smaller purchases you may get, like shelving or office upgrades, small scale tech, things like that. With higher limits and phase outs, it gives you some flexibility. Bonus depreciation and Section 179 both help, but we'll pick the right one for your cash flow and for your state. Now, some energy incentives phase down after 2025, and the tip credit has been reshaped for businesses with service staff. So the bottom line, don't wait until March. You want to plan for those improvements in payroll classifications early so you can benefit now and not scramble later. With the estate exemption holding near the 15 million mark per person, now's a great time to plan your store's long-term legacy. Keep ownership documents, wills, beneficiary designations, all those things, keep those things current. Stewardship isn't just about today's sales and today's revenue, today's expenses. It's about what happens when you're no longer the one running the store or running or working at the restaurant. Peace in business comes from rhythm, and that's really important. We want to use your dedicated profit first accounts like the income, inventory, profit, owner pay, tax, and operating expenses. And we want to allocate those monies to those accounts twice a month based on some percentages of your business where you're currently allocating those, even if you're unknowingly doing it. When taxes are due, you're already going to have those funds available if you've been setting those aside. Start today, because that piece comes from stewardship when it's done well. And part of that stewardship is allocating money to those major expenses. So in the next 30 days, update your estimates, Map out some capital purchases, clean up your online sales reports, and schedule your profit first advisory calls. Don't drift. Don't just come and haul around. You want to make some good decisions. And so small steps now prevent big headaches later on. If you have any questions or need help in managing your company's finances, reach out. I'm here to help you turn your inventory chaos into some predictable profit and experience some true financial freedom. But remember what Proverbs 21:5 tells us: the plans of the diligent certainly lead to profit. Let's be diligent planners, and not just for taxes, but for purpose. So schedule a call with me by scanning the QR code on the screen or clicking on that link in the comments, going to jacobcurtiscpa.com. And don't forget to follow me, Jacob Curtis, and Curtis Accounting Solutions on Facebook, Instagram, LinkedIn, Pinterest, and YouTube. Thanks for watching, and we'll talk to you later.